The JP Morgan Equity Premium Income ETF, known as JEPI, is a relatively new exchange-traded fund that was launched in 2020 by JP Morgan Asset Management. This ETF, in my opinion, is great because it's designed to provide investors like you and I with income and capital appreciation potential by investing in a diversified portfolio of US large-cap stocks while also using a covered call strategy to generate additional income. In this video, we are going to go through all of the actual dividends that I've been paid up until this point with being a JEPI shareholder well over a year now. I think it'll be cool to go through and show you all the dividends that I've been paid up until this point, being that I currently own around $60,000 plus of just JEPI ETF alone. Also, we're going to get you up to speed with everything you need to know about JEPI as of now, sort of an updated video, because a lot has been changing as of recently. But let's start off with going over how the JEPI ETF actually works. The JEPI ETF invests primarily in US large cap stocks that are part of the S&P 500 index, providing investors with exposure to some of the most well-known and established companies in the world. So one thing to consider when thinking about maybe investing into JEPI is to know that they do invest in high quality names, and we're going to go over some of the top holdings later on in this video. However, with investing into these high quality names, the ETF also uses a cover call strategy to earn extra income. This strategy involves selling call options on the stocks in the portfolio in exchange for the premiums. Now, in a cover call strategy, the ETF purchases the underlying stocks and simultaneously sells call options on those stocks with strike prices that are higher than the current market price. By doing this, the ETF generates additional income from the premiums received from the call options, which can help to boost the overall yield for the ETF. However, there is a downside of this, and this is something investors should be wary of. If the stocks in the portfolio happen to rise above the strike price of the call options, the ETF would have to sell those stocks at a lower price than what they would have potentially been able to sell without a cover call strategy. So with the cover call strategy, simply put, you're basically offering the buyer of the call to buy the shares at a set determined price on or before an expiration date. And with this strategy, a lot of times it can work out just fine, but if the market happens to really start to run, there could definitely be a situation where you could have made more money without selling the covered call. And if this were to happen, of course, it would mean that the ETF could miss out on some capital appreciation potential of those stocks, which could also potentially limit the overall growth of the fund. Now, the other side of this covered call theory is, of course, downside protection. When you sell a covered call and you're paid the premium instantly, that more or less lowers your cost basis and or gives you some downside protection. So in the case of the market trading sideways and or down a little bit, the covered call strategy could be a great asset to the portfolio. Another important thing that a lot of people have been talking about as of recently is the JEPI dividend. Now, when it comes to JEPI's dividend, as we all know, it's paid out every single month, which is great, and that's partially why a lot of investors invest in JEPI. They want to have that recurring dividend every single month, and possibly investors can choose to live off the dividend or use the dividend to pay some bills, etc. The dividend as of the recent months has been dropping. Back in October and November, there was a 61-cent per share per month dividend paid by JEPI, which is a very, very high amount, considering a one share of JEPI costs around $50 to $55 per share. But over the last month, the dividend had dropped down to 57 cents back in December, and then 44 cents in January, and then to a new low of 41 cents per share back in February. Because the dividend has been dropping as of recently, it really bears the question, how is JEPI's dividend amount even determined? So the way this works is the following. The JEPI ETF pays out dividends to investors on a monthly basis, and the amount of dividends is determined by a few factors. First, the ETF generates income from dividends paid out by stocks in the portfolio, which is then distributed to investors on a pro rata basis. Additionally, the ETF generates income from premiums received from call options that it sells, which is also distributed to investors on a pro rata basis. However, the amount of income generated from the call options may vary month to month, depending on market conditions and the performance of the stocks in the portfolio. And it's worth to note that the dividends that are paid out by the ETF may not be fixed, as they can be influenced by a number of factors, including changes to the overall market conditions, fluctuations in interest rates, and shifts in performance of stocks in the portfolio. As a result, investors like myself that hold a lot of JEPI should be ready to see massive shifts in the dividend payouts that we receive month by month. And the way that I look at it is pretty simple. Over time, at least over the next year, as long as JEPI pays out somewhere in the 8 to 10% and the share price of JEPI stays relatively flat or hopefully up, I'd be more than happy with that type of return. Next, let's go through and look at the actual top 10 holdings that are in JEPI as of right now. So a lot of these stocks are actually quite familiar. JEPI holds some really high quality names. The biggest asset right now is ABBV. Then we have PGR Progressive, we have Hershey, Pepsi, Coca-Cola, MasterCard, Alphabet, Microsoft, Visa, and United Health Group. Comment down below yes or no if these were the names that you thought prior to watching this video that made up of the top 10 holdings in JEPI. Finally, I want to go through a few of my dividend stock portfolios and show the actual payouts that I've received from holding shares of JEPI over time. So this is from one portfolio. You can see that at the beginning of 2022, so pretty much a little bit over a year ago, I was receiving around $59 per month from JEPI. The next month, $49, the next month, $61, $77, $62, then $79, $96, then we saw it drop down to $82, and then finally over $100 per month started back in September, it looks like, then $104, $132, and $149 from JEPI in this one portfolio. From this other portfolio, we see $2.31, $2.94, $2.34, then we move up to $12, $18, $21, $24, $130, $176, and then $335, which was as of December of 2022. Then over the last 3 months from this portfolio, $315, $283, and then the most recent payout dipped again to $268. So you can see right here that throughout the months, the fluctuations obviously are pretty rapid. $315 from 1 month when the dividend is, around 61 cents per share, then down to 44 cents a share, drops the payout to just $268. But again, as a JEPI investor, you have to be prepared for these different payouts, and hopefully over time, they all even out to become a very good, healthy yield. If you enjoyed this video and you want to see more videos like this, make sure to please drop a like on the video and subscribe for more. Thanks as always, and I'll see you in the next one.